Welcome to TradeTheNBI.com. This is John, the reporters for the 7th. Well, things are getting fun out there. We've got Europeans cutting rates into their soft nothingness, but the euro's climbing. We got the U.S. market climbing, despite the fact that we're seeing increasing number of weak numbers, crude builds. All sorts of interesting things are taking place, but the readings indicate that the money still wants to keep buying, that we haven't reached where we're headed. You can see massive increase in short interest here with the NBI White taking a big leap from a daily standpoint. Will it have much of an impact? And not at this particular stage, because we're still getting decent volatility in the overall moves. But overall, the net buy programs are still doing just that. And, it's when you get crazy money doing crazy things, this is the end result of it. We saw this wasn't too different than going in past the 209 period in that, where Fed just decided to, throw money at everything, and that began this cycle of a decade of easy money. And then as soon as they tried to do little constriction, everyone gets all hand wringing and scared that the world is coming to an end, and it didn't do anything because they're still spending staggering sums of money. And so the Nasdaq breaking out into its new highs, of course, all in the hopes of new technologies like .com bubble, where everyone was like, oh, the internet going to take over the world. Well, for now, it's AI is going to take over the world. In this case, it actually may, but that's a different story in and of itself, assuming the world survives. As you see, the Russians are moving their ships into the Caribbean, and we have the escalation from European countries sending boots on the ground into Ukraine. Treasuries continue to lower in yield in opposition to just reality. So, this is pricing in some kind of major, Fed action that's moving rates to, super low levels, which how? I don't even know. I mean, given what is going on with oil, and now you're certainly nowhere near it. It's 75. Are you kidding? I mean, if we were in the 40s or something, then yeah, that would make sense. Everything would be good. Energy would be cheap. The economy would be thriving, and deficits wouldn't matter as much. But this idea is that everything's backwards these days. And the reality is, for oil, it's probably relatively cheap. I know they've been flooding as much as they can with the reserves. We've got crude builds everywhere. So that begs the question, did demand just fall off? And if demand fell off that quickly, what does that say? Of course, from a market standpoint, they would say, oh, yeah, that's great. It means the Fed's going to ease. It doesn't necessarily work that way, because inflation certainly hasn't stopped. So, and of course, the cutting in rates for the ECB and the euro goes up. Figure that one. I mean, I guess it's a counter trade, and of course, that makes sense. But at the end of the day, this euro rate with them cutting rates, bizarre. Simply because, well, why would you put your money into the ECB when you can get a far better return in the U.S., even with the craziness the treasuries are doing? You'd still get a better yield. So why be in the euro? And then with oil prices rising, it's a bizarre trade at this particular stage. I would expect it to fade back as well, though they all suspect that the U.S. is overspending at such a dramatic rate that the inflation and everything in the U.S. is going to be. But still, you would end up making more being in the U.S. market than you would be in European. So strange. I wonder how some of these people are even surviving, given what we're seeing from some of these trades from a gold standpoint. And we know this is going to continue to rise. The insanity is only going to grow, and that's just going to keep moving. Crypto is going to move all of the fringe assets that people are going to look as a hedge to what is being done with, fiat currencies and, Western government, so to speak, from an ETH standpoint, and kind of a range as well. It's going to take something special to break them out, and That could be anything from a secondary hyperinflation report. I know we saw the numbers that came through where they did the math, and for the last 3 years in the U.S., at least for an employment standpoint, there was zero improvement for employment for native born. But and this points to why you see the illegal immigration. All of the job gains that they've been reporting throughout have been strictly from illegal immigrants getting that permit to work for 5 years until their deportation hearings are heard. And so that's what has filled in. That actually has probably even kept inflation somewhat down because that decreases wage pressure as you bring in all these people who are willing to work for far less than regular U.S. citizens, and that makes a difference. And that's always been a theory and always been a plan to help reduce inflation in general, because wage inflation really is the one that drives a lot of prices to extremes. And wage inflation is usually a secondary outcome of prices rising and people demanding more money because they can't make ends meet with what they have because purchasing power has been declining. So there you have it. From a 5K, 50K standpoint here, we closed out from that long trade that it took right before the big jump. And of course, evened out, and we expected, you get at least a third to half return within this. Still has a lot more to fill back in, going all the way back to this positive extreme down at the 5330 range. So we're just in that divergence right now, and you still have cyan under red at this particular point. You had that brief period where it broke out. Same thing here again, the magenta breaking down below, blue below gray right there, and then once the full crossover is when you get the acceleration of it, when you get the crossover of the white to the red. Didn't last long. It was a quick turnaround. Blue moved right back above, and that happens. But the secondary move will probably be a little bit more significant. So we'll take it from there. But in all, the volatility range still good, as expected, and you can see it from an intraday standpoint. Swift decline, bought back up in the middle run of it. Here we are in the post market. Modest, healthy at this particular stage, but a slight increase at this particular point in the European session. I'll probably fill back in a little bit to get some positive extremes to take care of. Going right back down to that 65 range. That's only within 5 points or so. Wouldn't be hard to take care of that before the regular open. But all in all, didn't miss much during my spa day. I figured after the big explosion, have more of an inside day, which is exactly what we got. So all set to in the option period, and that will begin the setup for next week's range move of volatility as we continue to push towards new highs. Gotta love it. That's climbing that wall of fear. That's where these terms come from. They have a practical application. As always, though, trade well. Anything relevant, I'll put on the Skype chat for you. Have a good one.